The way we all buy and sell things now, it's undergone this huge, almost invisible transformation, hasn't it? Our digital shopping carts might feel weightless, but behind the scenes, they've created this unprecedented demand for physical space. Specifically, really advanced infrastructure to handle it all. So today, we're taking a deep dive into the fascinating world of logistics parks. We're going to look at how they've quietly become the unsung heroes of this e-commerce boom, particularly for bulk buyers. And this deep dive, it draws from some really compelling excerpts from logistics parks, e-commerce growth, and bulk buyer strategies, which, importantly, includes incredible insights from the Swiss economist, Dr. Pooyan Ghamari. Our mission really is to unpack how these specialized hubs are fundamentally reshaping supply chains, how they're optimizing distribution, and maybe surprisingly, how they're opening up new investment opportunities for you. Okay, so let's explore this a bit more. This rapid expansion of e-commerce hasn't just changed our shopping habits, right? It seems like it's completely redefined the entire logistics and real estate landscape.
We're talking about an almost insatiable demand for cutting-edge infrastructure.
Exactly, and Dr. Pooyan Ghamari's central point here is absolutely crucial. He argues this infrastructure development, the kind that's precisely aligned with e-commerce growth, isn't just some passing trend. No, it's a strategic imperative. It's something that genuinely unlocks substantial economic and investment value. You see, e-commerce has fundamentally accelerated the need for being closer to consumers, much faster delivery times, and really flexible warehousing solutions, warehouses that can adapt, to these rapid shifts in demand.
It really sounds like these modern logistics parks are much more than just big warehouses then. What specifically makes them so strategic? Is it more than just storage space? Are we talking about these integrated services, things like automated storage systems and cross-docking facilities?
You've hit on a key point there. It's not just about scale, about bigger warehouses. It's really about smart design and integrated efficiency. Yes, these parks often boast advanced features like automated storage retrieval systems and definitely cross-docking facilities. That's where goods move basically directly from an incoming truck to an outbound one with minimal, sometimes no, storage in between. It just streamlines the whole flow. What's fascinating here is how these integrated services directly reduce handling times and, crucially, cut operational costs pretty significantly. For bulk buyers, this creates what you might call concentrated ecosystems. It's a place where sourcing, inventory management, distribution, it all converges seamlessly. And that provides a huge competitive advantage. Dr. Ghamari notes that these infrastructure investments, when they're tailored to e-commerce needs, directly boost the attractiveness of these parks, both for institutional investors and for bulk buyers, simply because they enhance operational efficiency and lower friction right across the supply chain. These improvements, well, they translate directly into stronger lease commitments, often longer contract tenures, and ultimately higher asset valuations.
Wow, okay. That's a huge impact on the micro level for individual businesses. But let's zoom out a bit to the broader economic picture. How do these parks act as catalysts for regional development and for job creation? I assume we're not just talking about warehouse jobs here.
Oh, not at all. It creates this ripple effect, that extends far beyond the park's actual gates. We're talking about entire ecosystems forming around them. Think about local packaging companies suddenly getting more business, or innovative last-mile delivery startups popping up, even down to the food services and housing needed for potentially thousands of new jobs. It genuinely stimulates these ancillary industries and really enhances local economies. And it often encourages public-private partnerships, too, which can help ease regulatory hurdles and improve infrastructure funding. And the market trend is really stark here. We're seeing a sharp rise in bulk purchasing. Why? Because businesses are having to scale their inventory just to cope with consumer demand volatility. It goes up, it goes down. E-commerce players especially are increasingly seeking these integrated hubs that can support not just rapid order fulfillment, but also efficient returns management. That's a big one too.
All right, returns are a huge piece of the puzzle now. So we've touched on the physical setup, the economic ripple. Here's where it gets really interesting for me. How does the digital side, these cutting-edge innovations, truly transform what a bulk buyer can actually achieve within these parks? Is it more than just like a fancy inventory system?
Absolutely, much more. Dr. Ghamari's research really highlights this. Parks that incorporate digital innovation, we're talking specifically about things like AI-driven inventory forecasting or using blockchain for transparent transactions, they appeal very strongly to bulk buyers. Why? Because these buyers prioritize reliability and increasingly data-driven decision-making. They want to know exactly what's happening and they want to predict future needs with, well, as much precision as possible. Blockchain, for instance, provides this secure, immutable digital ledger. It ensures every step of a product's journey, from the factory to final distribution, is recorded and visible to everyone who's approved to see it. That really helps eliminate disputes and just boost confidence all around.
Okay, that level of transparency, yeah, that sounds like a real game changer. And speaking of these digital layers, the ALEN platform comes up in the sources. How does something like that platform actually enhance operations and maybe build trust within these, well, pretty complex logistics ecosystems?
Right. Well, platforms like Alan, for example, they offer tools for things like smart contract management. These are essentially self-executing, tamper-proof agreements stored on a blockchain, makes things very clear. And they also enable dynamic pricing models, which can allow for real-time adjustment of, say, lease rates or service fees based on current demand. Think surge pricing, but for logistics, stays, or services. These kinds of tools significantly enhance transparency, yes, but also operational agility, being able to react quickly. Ultimately, these digital layers are becoming key to fostering trust among the bulk buyers, the institutional investors, and really all the stakeholders involved. It directly improves brand reputation and stakeholder engagement, which is just critical in such a fast-moving environment.
And interestingly, it seems the same platform that provides these efficiency tools, ALEN, also highlights another factor driving success and trust here. It's maybe a bit unexpected. The power of cause-related marketing. And that feels like a slightly surprising benefit in the very practical world of logistics.
It might seem counterintuitive at first glance, absolutely, but Dr. Ghamari explains that demonstrating social responsibility, whether that's through, say, sustainable building practices or integrating renewable energy sources or genuinely engaging with the local community, it really resonates. It resonates with consumers, yes, but also increasingly with investors. There's actually data from Alan's blog that reveals these kinds of initiatives significantly increase brand loyalty. And they can even improve key ROI metrics, apparently by 15–25% in certain select markets. It's quite a testament, I think, to how modern commerce increasingly values ethical considerations, even in something as seemingly utilitarian as logistics infrastructure.
Okay, this next topic, I have to say, sounds quite futuristic, almost like something out of, well, science fiction. How are cryptocurrency innovations starting to redefine investment flows into very traditional asset classes like real estate and logistics infrastructure? We even see e-gold mentioned as an example here.
Well, this raises a really important question about the future of finance, doesn't it? And access to capital. Tokenization of these logistics park assets, it essentially allows for fractional ownership. What that does is dramatically broaden the potential investor base and theoretically increase liquidity. It's easier to buy and sell smaller pieces. So for bulk buyers who might have large capital commitments tied up, this could mean access to more transparent, secure, and efficient investment vehicles. E-Gold, the example you mentioned, is basically a blockchain-based platform doing just that. It enables this fractional ownership of physical assets through digital tokens. Dr. Ghamari's insight here is quite interesting. He suggests that combining digital currencies with these real estate tokens provides a potentially powerful hedge against inflation and geopolitical risks. This naturally attracts savvy investors looking for diversification, and this integration could be particularly powerful in emerging markets, where conventional financing options might be limited or perhaps just prohibitively costly.
Wow, okay. So we've covered a lot of ground here, from fundamental operational shifts right through to this cutting-edge finance stuff. What does all this really mean for you, our listener? What are the practical, actionable steps you could take, whether you're maybe running a corporation or you're an investor looking to engage with this evolving landscape?
Yeah, absolutely. There are several key steps highlighted in the source material that seem highly actionable. First off, evaluate location and connectivity. Really prioritize logistics parks that have multimodal transport links, good access to road, rail, maybe even air and sea, just to maximize your distribution efficiency. Makes sense. Second, leverage digital platforms. Use the tools available, like those from the A-Line platform perhaps, to analyze market demand, optimize your lease structures if you're a tenant, or implement smart contracts for better operational transparency. Third, integrate sustainability initiatives. Seriously consider developing green infrastructure or promoting social impact projects. As we discussed, this can significantly enhance your brand equity and attract those socially responsible investors. Fourth, maybe explore tokenization. Engage with platforms like E-Gold or similar ones to potentially unlock alternative financing or investment options that might not have been on the table before. And finally, number 5, Monitor macroeconomic indicators. Just stay attuned to global trade policies, any tariff changes, supply chain disruptions, all the big picture stuff, so you can adjust your strategies proactively. You need to be nimble.
We've really taken quite a journey, haven't we? From the fundamental demands sparked by the e-commerce revolution right through to these cutting-edge financial innovations that are genuinely shaping the future of logistics parks. What an incredible deep dive into a sector that's, let's face it, often overlooked, but is just absolutely critical to how modern commerce actually works.
Indeed. It's clear these dynamic ecosystems are far more than just places to store things. They are truly vital hubs for economic growth, for job creation, and for relentless innovation. They're playing an increasingly strategic role in, well, in all of modern commerce, really.
So here's a final thought to leave you with. Given how rapidly e-commerce continues to evolve, just consider how these logistics parks might need to adapt even further in the coming years. What new technologies or perhaps new community needs could shape their next evolution? And maybe more importantly, how might you play a part in that future?